Inflation is eating your purchasing power. With 6.5% inflation in 2022, money is fast losing its value. You see it when you go to the grocery store. Eggs, meat, milk, and most of the groceries are more expensive than ever before. Holding cash is a very bad idea because every year you can buy less. In today's video, we're going to tell you what assets you can better hold than cash. The government can print unlimited money, so there are plenty of assets you can better hold. Let's dive into the first asset. 1. Cryptocurrency. Cryptocurrency is a better asset than cash. But not every crypto is a good investment. Most of them are some worthless coins created out of thin air, like the US dollar and other currencies. The difference is that people have trust in the dollar, and the government will do everything to keep the trust. Bitcoin and Ethereum are better than the dollar, because Bitcoin has a maximum supply, 21 million. Every 4 years, there is a halving, and then there will be less Bitcoin mined. Now we create 6.25 Bitcoins every 10 minutes approximately. After the halving in 2024, we create 3.125 Bitcoin every 10 minutes. So Bitcoin is deflationary. This makes Bitcoin scarce. In 2140, every Bitcoin is mined. You should think about it. The US dollar is unlimited. Depends how much the government prints. Bitcoin is limited. This makes Bitcoin a better investment. If you want Bitcoin, I do a giveaway. $200 worth of Bitcoin. Just like, subscribe, and watch the video till the end. 2. Stocks. Asset number 2 is stocks. A stock is a small share in a company's profit. You are a little bit owner of the company. So if a company has 10 shares and you own 1, you own 10% of the company. If the company makes $10 profit, you get with that 1 share $1 profit. When the company makes next year $11 profit, you get $1.1. Most big companies increase prices when inflation is there, and they will make more profit. Big companies like Coca-Cola and Apple make record profits. This is because they increase prices with the inflation. If you own the stocks, your stock will be more worth because they can share more profits with you. 3. Art. Let's be honest. Many millionaires and especially billionaires own art. Art appreciated much in value the past 20 years. The average return on art is in the past years 7.6%, more than any bank will give you in the USA. There are ways to invest in just a little piece of art. You own a little share in the art, and when the price increases, your share increases in price. This is for sure better than holding cash. Especially in inflationary times, because famous art is only one of it. 4. Gold. Gold is well known as a safe haven, a hedge against inflation. That's why central banks love it. The Russian central bank and Chinese bank buying gold like the world is going to collapse. They have reason for that. It is because it's a safe haven. And it shows the population they have something to back the fiat money system. Gold is already for centuries the most famous asset. It is used for jewelry, so it has a real-world use case. 5. Real estate. Real estate is a great way to earn money with cash and debt. You can get a mortgage of 5% and have a return of around 8%. Then you make money with debt. There are 2 ways you can make money with real estate. The first way is appreciate in value, because the land will be worth more and the cost of building increase. That's because the material and labor cost increase over time. The second way is renting it. In many places, the renting market is very good for owners of properties. You rent the home and pay the mortgage with the incoming cash flow. 6. Luxury watches. Investing in luxury watches can offer unique advantages compared to holding cash in the bank. While cash in the bank may face the eroding effect of inflation, luxury watches often appreciate in value over time, driven by factors like brand reputation, rarity, and historical significance. Unlike cash, well-maintained watches can become coveted collector's items, fetching higher prices in the secondary market. Their tangible and timeless nature also provide a sense of ownership and aesthetic pleasure, making them not just an investment, but also a source of personal enjoyment. Moreover, the watch market has shown resilience during economic downturns. As collectors continue to seek tangible assets, diversifying an investment portfolio with luxury watches can provide a hedge against market volatility. However, it's important to note that the watch market can be complex and requires careful research, as not all watches appreciate equally. While luxury watches offer potential as an investment, balancing them with other assets remain crucial for a well-rounded financial strategy. 7. Yourself. Investing in yourself through courses and education is a profoundly beneficial endeavor with far-reaching effects. Continuously expanding your knowledge and skills not only enhances your personal and professional growth, but also equips you to navigate the ever-evolving landscape of opportunities. Education provides you with the tools to stay relevant and adaptable in a rapidly changing world, making you more competitive in the job market and allowing you to pursue diverse paths. Courses and education empower you to specialize in areas of interest, boosting your confidence and competence. This newfound expertise can lead to increased job satisfaction, higher earning potential, and the ability to take on more significant responsibilities. Moreover, the process of learning itself cultivates critical thinking, problem solving, and communication skills that are invaluable in various aspects of life. Investing in yourself also demonstrates your commitment to self-improvement, a trait that often garners respect and admiration from peers and employers. It fosters a sense of personal fulfillment as you set and achieve goals and open doors to networking opportunities and new connections. Ultimately, the dividends of investing in yourself are immeasurable. By continuously expanding your knowledge and honing your skills, you lay the foundation for a fulfilling and successful life, where you're equipped to make meaningful contributions to both your personal journey and society as a whole. Conclusion: holding too much cash is not good. There are far more better ways than holding cash in the bank. But don't hold too less cash in your bank account, because in case of emergency, you should have cash on hand. That was it for today's video. If you found this helpful, then subscribe and like. And I'll see you in the next video. Bye bye.